Hello, everyone. Welcome to our webinar today. I'm Rajapakse, the Partner Development Team Lead at OnPay, and I'm so excited to have you join us. We've been partnered with Guideline for several years now to make it easier for OnPay clients to not only offer, but also automate a 401k process that's traditionally seen as overwhelming and time-consuming. And without further ado, let's meet your amazing presenters today. We first have Kacie Tipton. She is the most senior account executive at Guideline with over 2 years at the company. Prior to Guideline, she spent time in public accounting, specializing in taxes for nonprofits, and she's a Philly native to boot. She resides in Portland, Maine with her husband, a fur baby, and a son on the way this fall. So congrats, Kacie, and can you say hi to everyone?
Hi guys, excited to be here.
And we are also joined by Scot Gordon, an account executive at Guideline. He has a wealth of knowledge with over 12 years of experience in financial services with a focus on 401k plans specifically. Now, prior to that, he was a small business owner himself, and he grew up surrounded by a family of entrepreneurs. Born and raised in the Bay Area, he now spends his free time being a human jungle gym for his 4 children. So, Scot, I'm glad we could pull you away from the jungle gym duty today. If you don't mind, say hi to everyone.
I'm glad you could do. Thank you very much. Good morning and good afternoon, everybody. Happy to be here.
All right, well, today, everyone on this call, you'll walk away with an understanding of the basics of 401k and more. So we're going to start by discussing why a 401k, what makes Guideline different, what is a safe harbor plan, and we'll follow with time for you to get any questions about 401k or Guideline answered. Now, this session is being recorded, so we'll be sure to send that along with a recap in case you'd like to share with anyone else on your team. And don't be afraid to ask questions. We want the session to be as interactive as possible. In the questions section of your GoToWebinar panel, feel free, ask away. We've dedicated time at the end just for that purpose. All right, Kacie and Scot, take it away.
Awesome, perfect. So just kind of, to high level dive in here, when you look at the 401k from an access gap perspective, especially for small businesses that are sitting from that 0 to 99 employee range, you're going to see that about 75% of small businesses and their workers lack the availability of a 401k. The interesting figure on this end is is that small business owners and their employees, about 70% of them, when asked if they would participate in a 401k plan, said that they would actually heavily utilize the plan. Here at Guideline, we see that be even higher. We have a participation rate that hovers around 83%. So it really is something that we strive to provide to small businesses, that capability of actually offering a plan to close down that access gap, to give these, individuals something to actually have at the retirement age. Carrie, you can go to the next slide. So when you look at a 401k, why a 401k? The first is going to be the tax savings component. So at both the company and the individual level, you also have the capability of attracting and retaining top talent. 401ks are something that majority of the workforce would like to see as an added benefit. So being able to recruit heavily, having a 401k can be really helpful in that scenario. It also just shows your employees that you're invested in their retirement and their future. So you care about them outside of just their work that they're doing on a day-to-day basis for you. It's something where you're showing that, hey, we're in this for the long haul with you. Let's set up a 401k. Let's help you get to that successful retirement savings. And then lastly, it just increases employee job satisfaction. When you look at those employees that are actually offered a 401k, they feel as though that their employer actually cares about them, regardless of offering a match or not. So that's just an employer opening up a plan, giving their employees the capability of saving towards retirement, not actually them also providing any type of retirement benefit on top of that. So if we dive into the first one, you're going to see here the employer tax advantages. This is something that's completely new for 2020. So when you look at the Secure Act, it was something that came out in January of this year. What it did is it increased the overall tax savings component from what was $500 per year for the first 3 years to actually up to a maximum of $5,000 for the first 3 years. So it's overall a huge added benefit. In addition to that $5,000, Anybody that's utilizing a Guideline plan, since you're set up as what's called an automatic contribution arrangement, you qualify for an additional $500. So not to deep dive too heavily on how this tax credit is really, goes through and is calculated for you, but essentially the way that you would get the $5,000 towards a tax credit would be based off of your administrative expenses. The big difference between Guideline and majority of providers is that here at Guideline, we charge the employer the administrative burden. What that does is it actually allows you as an employer to qualify for this tax credit. It's something that if majority of your administrative burden was pushed down to your participants and say basis fees, something that they wouldn't have access to. So how it's calculated, it's either going to be, as you can see here, it's $500 or $250 per each non-highly compensated employee. So that's an employee that is not earning over $130,000 or is not a greater than 5% owner. And then it is limited to 50% of your plan's actual startup costs. So that would be the actual administrative costs that your plan would incur here at Guideline for the year. Most of our plans don't hit upwards of that 5,000, but it's nice to know that you would have that 5,000 plus the additional 500 as an added benefit when you get a 401k up and running.
Thanks, Kacie. A little bit here about the history of Guideline. We were founded with a mission to fill a void that existed in the 401 space previously, which was specifically a quality option for smaller businesses. Our founder, Kevin, was looking for a plan for a previous startup of his and found that nothing quality existed, so he went out and decided to build it. And I can personally speak from experience working for some of the legacy providers, the big names we've heard of before, that small businesses were typically neglected, mostly because they were not profitable for those big providers. And if we can go to the next slide. Part of the reason why they were not profitable and what Guideline has solved are all of the different administrative tasks and services that are required to keep a plan in good order. Many of the things you see here on the screen needed to be outsourced to third-party administrators, which required significant time and expense, which was always passed on to the small business. But Guideline came up with a solution to that. Essentially, by use of technology, we are able to fully bundle the 401k plan, including all of the services you see here on the screen, compliance, reporting. So all you need to do, as long as you're working with OnPay, is keep your payroll up to date, and then the 401k plan will take care of itself. Next slide, please. Another important point, we also went out and obtained the appropriate regulatory certification to act as the plan fiduciary, both as the administrator of the plan, which basically involves the day-to-day plan administration and government filings, as well as the investment manager, which means creating a quality investment menu for your participants to choose from.
So touching on, the participant-based fees here at Guideline, one of the main drivers that does make Guideline so unique to the industry is from a pricing perspective, we don't actually charge any participant-based fees. So there's never going to be an asset under management fee. There's not an advisory fee, custodial fee. All you would be paying as a participant in a plan here at Guideline is the fund expense ratio that the fund itself is charging. What you see here is 6 basis points, so it's 0.06%. That's the fund expense ratio for all of our professionally managed portfolios here at Guideline. Compared to the industry average, which is around 114 basis points, so 1.14%, there's a significant difference between those two numbers. So in the next slide, we have a graph. What you'll see there is, over the course of your retirement savings, same annual return in both options, you're actually able to experience significantly more compounding interest when you don't have those burdensome fees, basically compounding on top of each other. That's also why here at Guideline, we do see a higher participation rate. We hover at 83% because your participants in the plan like to see that they're able to save for retirement and they're not constantly having to pay out for fees to actually just utilize the plan. As an employee utilizing Guideline, as I mentioned, there's no management fees. We offer ultra low cost investments. From an investment perspective, our fund menu, there's 41 fund options. Primarily they're Vanguard mutual funds, so they're going to be low cost index funds. There are a few others on there as well, but none sit higher than a 33 basis points, which is still well under that industry average. This personalized retirement assessment is something that you will find in every dashboard as a participant here at Guideline. What it is it's our form of robo-advising. So it takes into account, age till retirement, investment expectations, and risk tolerance. Based off of that, it will recommend one of our 6 professionally managed portfolios. On the flip side, if you or any of your employees are expert investors and they want to make those decisions on their own, they have the complete flexibility to do so. They can do a custom portfolio, in which case you'll have access to the full fund menu of the 41 options, and you just select an allocation percentage that works the best for you and your investment needs. The big thing about your portfolio here at Guideline is the fact that you can make changes to that at any point during the year. So very different from health benefits. The 401k is something that you can actually adjust both your contribution rate and your portfolio as frequently or infrequently as you would like throughout the year. And you would be able to do that right within the interface that you would have access to here at Guideline. The last big thing to touch on is going to be our customer support team. Customer support is available, 6 a.m. to 5 p.m. Pacific time. But the beauty of this team is the fact that it's not going to be just available to you as an owner of a company. It's actually available to all of your employees. So it completely cuts down if you don't have an HR personnel. It gives everybody a direct contact here at Guideline. So it eliminates your need to actually act as the middleman on the plan.
And then we have 2 platforms for you to choose from since you work with OnPay. We have the Startup and Prime. Essentially, the difference between the 2 is the Prime plan comes with a dedicated account manager and a form of profit sharing called New Comparability, but they both come and include the fully serviced 401k plan and no other ongoing fees aside from what you see here. The Startup plan is $39 a month plus $8 per participant. The company pays all of that. And the Prime plan is $99 a month plus $8 per participant. Again, to reiterate what Kacie said earlier, no participant costs by Guideline whatsoever. And next page. And so when it comes to your plan design, there are certain parameters that we can work within to best tailor the plan for your needs. Starting with eligibility and the default contribution rate. I'm going to let Kacie talk next within our Safe Harbor presentation about different matching formulas that we can speak to, but we can accommodate matching, profit sharing, different vesting schedules to best accommodate your needs.
So looking through the Safe Harbor season, big thing about Safe Harbor and what even is Safe Harbor. So if you hop to the next slide here, a Safe Harbor is a way for you to offer an employer contribution that actually exempts your plan from IRS compliance testing. I know that probably sounds like a lot. Basically, when you look at every 401k plan, and this is something you can hop to the next slide if you'd like, Kara, you're going to see non-discrimination testing. This is the compliance component that has to be checked on every 401k. It's actually checked on 1231 by the IRS. What they're checking for is they're making sure that the plan is not just favoring one set of employees over another. Specifically, that it's not just favoring ownership and highly compensated employees, but that it's in the best interest of all of your employees across the board. How they do this is strictly in the ADP ACP test. You're going to see that they're going to separate your employees into 2 groups. Anybody that is a greater than 5% owner or is earning over $130,000 is going to be considered that highly compensated employee, and the remainder of your employees are non-highly compensated. What they want to make sure is that those two groups are participating at a relatively similar rate. What they don't want to see is that ownership is trying to heavily utilize the plan while the rest of your employees are, barely contributing or not actually participating. The other test that goes into that is top-heavy testing. Top-heavy testing is a little different. The big thing with top-heavy testing is that ownership or any key employees cannot make up more than 60% of the assets in the plan. This is something where with top-heavy testing, a lot of the times we'll talk through with owners. If your overall goal specifically is to actually utilize the plan heavily as an owner, and you're not sure what your employees are going to participate at from a rate perspective, that's normally when we'll point you in the direction of a safe harbor plan. The safe harbor plans, and Kara, if you want to hop to the next slide here. The safe harbor plans are going to be something that they exempt you from the IRS compliance testing. The big thing with safe harbor is that there are 3 different safe harbor options. There's, and this is something where we can provide you more information on those 3 different options. But basically, there's 3 different options. The most commonly selected is the basic match. It's 100% of the first 3%, 50% of the next 2. Essentially, it equates out to a 4% match. There's also another 4% match option, and then there's a non-elective option. The biggest thing with safe harbor and what we see here at Guideline is the fact that matches that are offering, or employers that are looking to offer matching, about 80% of them do go the safe harbor route. So, when you're looking at safe harbor and today's schedule, it's, why the safe harbor plan? What does that look like? So safe harbor is something that's very different than, say, just setting up a 401k with no matching. Safe harbor actually does have IRS deadlines. So when you look at a safe harbor plan, the IRS mandates that your safe harbor plan for 2020 must be started by October 1st. That backs into a hard deadline with us here at Guideline for setup of August 21st. The reason being is we have that automatic enrollment component. We have to have 30 days to provide safe harbor notices to your employees. So that gives us enough time to ensure that everything's up and running. Anybody with an existing plan that's looking to transition to safe harbor, since that can happen only on a calendar year basis, there's a little bit more flexibility. So from a timing perspective, we would just need everything set up by November 30th, which backs into the 1/1 start date that you would need for safe harbor. Yeah. And so just to sweeten the deal with all of our safe harbor plans here at Guideline, for new customers who sign up with safe harbor before the 8/21 deadline, you'll actually receive the first month free of Guideline. So it's a nice added incentive for you guys. If you've been in the market for a 401k and safe harbor is the way that you really need to go for your company, it's going to give you that nice added incentive, especially because Guideline charges monthly in arrears.
All right, so Kacie, Scott, are you all ready for questions?
Absolutely.
Yes, go for it.
There we go. Perfect. So our first question is, why is now a good time to start a 401k plan? I'm thinking about it, but with all the COVID stuff going on, I'm not so sure.
You want me to take this one?
Yeah, go for it.
Awesome. So when you look at starting a 401k, the 401k is something that you're saving towards retirement. Obviously, there is a lot of kind of vulnerability going on out there in the world. One of the added benefits of starting now is you're kind of entering into the market at an all-time low. So you're allowing yourself that capability to see those funds grow. Overall, you're still allowing yourself to have those tax benefits. So not only individually will you be able to contribute up to the $19,500, you as a company will be able to have that added tax benefit as well by opening up that 401k. So it can be something that can be pretty beneficial, especially if you're looking for any added incentive that way.
Perfect, thank you. And I just want to send out a quick reminder to everyone, we are getting a few questions coming in, but if you think of one, make sure even while we're addressing someone else's question, feel free, add it in the question section of the GoToWebinar panel. One of the questions I can answer, can we get these slides emailed to us? So everyone that's attending, you'll receive a follow-up email. We also have a handout section in the GoToWebinar panel that you can also download a handout right now. So another question, can you speak to the range of options in terms of matching employee contributions? Are there set percentage ranges? We're looking at adding 401k as a benefit, but trying to get a handle on cost.
Yeah, that's a great question, and it partially relates to the last question. You don't have to offer any match whatsoever. We can customize the matching program that you want to be offering. There are specific safe harbor matches. Kacie touched on those a little bit, but you do not have to offer a match. So it really comes down to what the company can comfortably afford to do in terms of their decision-making process there.
Perfect. And then another question, my accountant has recommended a simple IRA. Why would a 401k be a better option?
Got it. That's a great question. That's actually something we get very frequently. So with the simple IRA is something that from a owner perspective, it gives you the flexibility to just make a one-time contribution up to that the 57,000 threshold, which is the IRS, right? Limit for employee and employer contributions. The thing with a simple IRA is that once your employees actually become eligible for the simple IRA, well, sorry, I'm just scrubbing a step. I'm sorry. So with the simple IRA does require it's going to be 100% of the first 3% match or a 2% non-elective contribution. So with the simple IRA, although there's not compliance testing, you are required to do some sort of matching, and there are IRS regulations on the simple IRA. So it would be something where a employer could set up the simple IRA and you would have to actually keep it for the full year. You would not be able to terminate it during the year. So there's some risk with that if you're not sure if you are going to be able to afford the simple IRA, since with a 401k you can get it up and running without any matching or anything of that nature.
All right, thank you. Next question, what are the setup fees, or are they covered in the monthly fees?
Yeah, great question. There are no additional setup fees. Everything is covered with that $39 or $99 a month base fee plus $8 per participant.
Nice, and then a month without 401k fees on top of that sounds pretty nice too.
Yep.
All right, so question from Suzanne, is there a participant minimum for starting a plan?
No, you can have just yourself as the business owner, no minimums at all.
All right, another question, can you explain a little bit more about the added prime benefit, meaning what is new comparability profit sharing mean?
Sure thing. So new comparability profit sharing is going to be a type of profit sharing that takes into account ownership, age till retirement, and the overall compensation limit. When you look at individual companies that are heavily utilizing new comparability profit sharing, you're going to see it where maybe it's an owner closer to the retirement age who is the significant oldest employee and the highest earner. What it does is by utilizing an actuarial figure, it does a bell curve. So it provides those who are sitting the closest to the retirement age the ability to receive a larger portion of the overall profit shared amount, as opposed to those who are, maybe entry-level employees or 30 years old. They're going to be receiving a smaller portion because the way that it's calculated out is that group will essentially receive the overall same amount. But the way that the bell curve works is that ending person, the owner, is going to utilize it the most. It's very different than the comp to comp pro rata profit sharing, since pro rata profit sharing only takes into account the compensation amount. So it's just the percent of income, and it would be the same percent to all eligible employees.
Perfect. And I think we have time for a few more questions. For any of you that we don't get to your questions, feel free though, we're going to send you an email after today's session so that you can schedule a time, speak with Guideline directly, get any and all questions you have answered. But a few more questions here. For a safe harbor plan, can I exclude part-time employees or employees that have not worked for us for 1 year?
So when you're looking at eligibility, eligibility here at Guideline is going to be something that you can exclude employees from a year perspective. So you can set your eligibility from, it's 0, 3, 6, or 12 months. The one thing that you will notice about all plans here at Guideline is we do not have a minimum hours requirement. What that means is any part-time employees will be eligible for the plan once they satisfy your minimum age and minimum service eligibility.
All right, and then final question, I'm self-employed. How do I go about setting up a 401k or 403b and IRA, and what are the max deductions?
So when you're setting up a 401k, you can set up a 401k with Guideline, self-employed. We have a lot of people that do that. From a limit perspective, the IRS overall contribution limit for you individually is $19,500 for 2020. They do allow for an additional $6,500 catch-up in individual contributions for anybody that's over the age of 50. Between employee and employer contributions, they allow a limit of $57,000. So what that means is, depending on what your earned income number is, you will either get up to that $57,000 if you're doing additional employer contributions, but you are limited to only 25% of your W-2 or self-employment income number. So depending on what that number is, it could limit your ability on the employer matching, but you're always going to be allowed to individually contribute up to that $19,500.
Thank you so much, and I want to thank everyone for their questions. Look out for that email scheduled time because I know there were a few questions we couldn't quite get to today. But thank you to our presenters as well, and have a great afternoon, everyone, or morning, depending on where you are.
Thanks, guys.
Thank you. Bye-bye.